Okay, so we'll talk about the implied volatility crush. So IV is going to stand for implied volatility. So before earnings, options prices can get very expensive. This is called high implied volatility. So it's like buying insurance right before a hurricane, okay? Or driving your car and then you just put insurance on it, you know? So before the release. So uncertainty is high, so options get more expensive in this case, okay? So if you are going to buy a contract before earnings come out, okay, make sure you sell it before earnings come out too. Don't gamble and sell your contract after earnings comes out because then the uncertainty would go ahead and vanish. Okay, unless you're playing for a way bigger take profit that's going to be way further out than you think. Okay, then try and sell your contract before the earnings comes out because it's going to be worth the most expensive then. Okay, so buying options right before earnings often loses money even if you guess the direction right. So if you buy a calls contract and the company beats earnings, and even if price goes in an upwards direction, okay, you might notice that your contract didn't even make you that much money. Okay, that's because price has to get rebaked into what it actually is supposed to be. So do not buy earnings before expecting you to catch the right direction. Okay, because even if you do catch the right direction, you're probably not going to make as much money as you would think. Okay, especially depending on the contract that you buy. Okay, the reasons why contracts get expensive like that before earnings is because they don't know what the number is going to go to. Okay, that's why. So implied volatility makes things more expensive. So understanding this really helps us. Let's head over to the next slide. And let's go ahead and let's talk about the gap. So earnings are usually released after the market closes. So it's usually after 4 p.m. Eastern Standard Time. Okay. Or it's going to be before market opens. So it's going to be before 9:30 a.m. Eastern Time. So you cannot trade standard stocks during the release unless you have extended hours access. So a lot of the times, once again, just like I talked about earlier, you're going to see that instantaneous price action. So the stock price will teleport, so it instantly gap up or down. Okay, and stop losses do not work against gaps. If you hold overnight, then you're going to be taking the full risk. So just know that even if you have a stop loss placed during the day, if price decides to run through wherever your stop loss is, then what it's going to go ahead and do is decide to not validate and just ignore all of those orders due to the fact that the price action is happening pre-market and after market. Okay, and you can only maneuver your options contracts. If you have shares, you can close a little before or after. Okay, but if you're on options, you gotta only get what you get when you wake up to the contracts. Okay, so even if you see price going in an upwards direction and you had some calls, don't expect money all the time. It really depends on a lot of things such as implied volatility, etc. Okay. So expectations matter. Okay, so beating estimates are required a lot of the time for a stock to go in an upwards direction. Okay, in order to start seeing a rally, and guidance is going to be critical. So the future outlook is a lot of times going to go ahead and overshadow the past results. And volatility crush. Options lose value instantly after the news. Okay, so you might notice a contract might be $500 before the news. Okay, and then after the news, it might go down to $200, even if the number were to go ahead and hit. Okay. So options lose value instantly after the news. And the gamble between everything. So holding through earnings has a high risk. Okay. Just a high risk factor. I'm not even going to say high reward. Okay. Because the reward that you were to get is not even worth it. And you wouldn't even get it as properly as you would. Now, if you're holding a super swing, okay, you're trying to hold a trade for months, weeks, some years, etc. Okay. Then I do understand. Okay. Do your thing and hold your trade as you need. But a lot of the times, make sure you're closing your trades before earnings come out. Okay, unless you know exactly what type of swing that you're holding. Okay, head over to Stackmode.net to learn more about anything stock related, investing related, or trading related. I'll catch you guys in the next one. Peace. Okay, so cool. So now what we're gonna go ahead and do is let's jump into these charts. Okay. We're going, I got YM pulled up here. Okay. So I'll start off on my weekly. Okay, so whenever we are looking at our charts, okay, we're gonna always start on our highest time frame first. We're gonna be doing our top-down analysis. Okay, we're gonna go from our weekly to our daily to our 4 hour to the 1 hour / 15 minute. Okay, so your weekly first, then onto your daily, then your 4 hour, then your 1 hour and 15 minute. Okay, so on my weekly here, okay, you can see the weekly candle that we're currently looking at is headed in a downwards direction. Okay, so I can go ahead and grab this, and I can go ahead and just put a line at the top of the weekly candlestick here. Okay, so we got the top of this weekly candlestick and the top of this weekly candlestick. Okay, these are gonna be the two areas I really want to reach to. Okay, now let's go to the daily. Okay, and then we can see price trying to trickle up. So let's see what I can read here on the daily. Okay, so on the daily, I have this super high up here. I have this wick up here. Okay, and it looks like right here, price decided to create resistance. Then we got above it, and it looks like we broke and retest off this daily. Okay, so it's really just getting in depth and seeing every candlestick for what it is. Okay, so let me go ahead and hop on my 4. Okay, so boom, I can hop on the 4, and I'm gonna go ahead and see things even more intricately. Okay, I can see that this whole zone here is imperative. Okay, this whole resistance area here, and then we have this whole support area here. Okay, so we got some break and retest here. I can see it. Okay, so after my 4 hour, yeah, we can start seeing price potentially might want to go ahead and fill in this little gap here. Okay, in between this area up here and in this area up here. Okay, so in this instance, even if I wanted to just stay on my 4 hour, okay, I would be able to analyze. Price decided to create some resistance here. Price fell down. Price broke above it. Price created a high up here. And then price decided to fall down. Okay, and create a low down here. Okay, we can see the break and retest for what it is. Now let me get on my 1. Okay, if I'm on my 1 hour here, see we have heavy price action from falling down. We can see price turning resistance into support. Resistance, price bursted up, came up here, price trickled down, came up to this area first, and then came down, turned this low into a new low. Okay. And then just from right here, if I wanted to, if I wanted to take a position, I could take this, could play up here, stop loss under here, or I could play for up here for a 1 to 2. Okay. Okay, so boom. We're gonna pull up some ES. Okay, so this is an instance here too. Okay. So here, price decided to just clip underneath the stop. Okay, and then we decided to find a new low at this support here. Okay. So if price were to make a new low and break the previous low that we had, Okay, getting a re-entry would be fine. You can either do stop loss under here, target up here. Okay, or you could play for the final target up here if you'd wanted to still. But you could play for this one and then stop loss potentially underneath this support low right here. And we've been going up for 2 weeks straight. Okay, so each one of these V's would have decided to work out. Any one of these that you would have played. Okay, so stop loss up here makes sense. Price getting overextended. It's been going up for, yeah, about 2 weeks straight. Price has been going in a straight upwards direction. So each one of these V formations you would have played, like if you would have entered down here. Okay, I played for this one. Or even if you would have played for this one. Right here. This one took a couple of days. 1, 2, 3 days. Take profit up here. Okay, so price just got overextended. Okay, we've been going up for about 2 weeks, but just when it is trending hard, you're going to be able to farm that uptrend super duper duper hard. I mean, you'll get about like 2 weeks of a good trend, honestly. The same thing from over here. We have the price went up from the 10th to the 30th. So that's about 2 weeks, about 15 to 20 days. So that's going to be a pretty good median average amount of about how often it would take for a price to create like a good trend, especially when it comes to going in an upwards direction. So here, price went up from September 2nd and didn't go down until October. So price a lot of times, yeah, it'll go up for a long time, pause, make a new low, and then go up again. So I'm really confident here though. I like how price stopped at that level of support. Okay, so even if you did wait for a re-entry, we could wait for price to start selling off. Okay, or you could just enter in here and stop loss under here. But if price were to start selling off and create a higher low, I would really, really like that and feel confident to take it to the take profit area up here. Yeah, yeah. I did the whole top-down analysis just to see everything. Let me go and see. Okay. I'm gonna pull up the NQ here. And I'm gonna pull up gold. Yeah, NQ here. It decided to run back into this little support zone here, which I'm a very big fan of. Yeah, so it's letting me know that this higher low, or that this low is pretty stable. Yeah, if we run into the pretty much same area twice and bounce, then that area is going to be pretty strong. So here would almost pretty much be a guaranteed trade. You could just wait for a pullback. It looks like right now price might be trying to top out a little bit. See, price has just been going up, so might want to sell off here on the 15-minute. But after this sell off and next bounce up, yeah, that would be definitely a nice trade. Yeah, let me pull gold. All right, so gold here. Let me help on my weekly. Got this area above current price. Got this one. And we got these two. Now let me help on my daily. Daily time frame. We got this wick up here. And we got this wick up here. Okay. 4 hour. Let me zoom out. I can start seeing price making higher lows. Starting from here. Got these. These. and then these higher lows here. So and it's looking like here. So yeah, the best things in my opinion to play, gold is gonna be pretty simple, and then YM of course. And it looks like here price might want to find a low at this area, since we got price bouncing at this area here twice. So it looks like we might want to at least spin back to like these resistance area up here. And then, you'd be able to just buy. If you want to do stop down here, take profit up here. And then on micros, this would be like a $200-ish stop loss. And then your take profit be this, or you can pay for this take profit up here. So yeah, this would be I like to set up a lot too. 1 to 3, yep. So I'd like to set up a lot, honestly, especially after we just heavily fell. And then yeah, for sure. And then let me check the trade-off 8 margin for micro gold. Yeah, I'm thinking MET. They do have micro ether. If I'm not mistaken, I believe trade-off 8 has the crypto futures on here too. Now, MET, micro Ethereum futures. So yeah, we can cover these too as well. Um, let's go over the crypto indices too, because you can actually pull off some nice trades with this too. And with the crypto indices too, they require pretty low margins. Like micro Ethereum, you can hold overnight with just $100. And it costs $50 to open. Micro Bitcoin costs like 2,500. Micro Solana. So yeah, they have the crypto futures on here too now. That's actually really amazing. So yeah, crypto futures are going to be something you can also play too. So you're going to have your YM, you can play gold, and then you're going to have your crypto futures as well too. So you just look for any setup that has that high or low setup and then take your risk based off of that. Yep. It's going to be GC. Yep. I'm checking all these right now. They have the MMC. Yeah, they've definitely changed some things around. They have the MMC Micro E Mini S&P 500, 400 mid cap futures. Yeah, but this price action is kind of wonky. So I would stay away from that one. Then we got the XRP, the ES, YM. Silver. Corn. Yeah, I was just gonna mention that. Yeah, I'm gonna send you the margin list. I just put it in the chat. So let's go and let's cover this. So the day margin, that's going to be the amount of money required in order to open the trade during the day. So it has to be closed before the 5 p.m. Yep. Okay. Got Bitcoin Cash, CME Bitcoin. M2K would be possible to play too. The micro E mini Russell. That one's not too bad. Let me pull that up as well. It'll be this one. You'll find this one will be pretty simple a lot of the times too. Yeah, this one's actually really simple. So as soon as this makes a new high or low, you can get in and take it up to up here. But price needs to make a new low first. That's real. So we have these lows. That's real. Yep. And this low. Yeah, honestly, yeah, I would need like, or you could trend line it too if you wanted. Okay. Yeah. Yeah. Mm-hmm. So trend lining it too, it really can't help, especially at first. Um, like if I just wanted to do this, do my 1 hour with it. Got the trend line here. Mm. And then there's gonna go ahead and be, let's say I did this one too. The price might want to come up to this one, pretty much guaranteed. Um, but just based off that 1 hour, we got 1, 2, 3, 4 green candlesticks in a row off of this low. That's a lot of buying after heavy selling. So honestly, I would like this trade a lot too. So this would be worth another attempt for sure. You could just get in. Take the take profit up here. And then after we take the take profit here, we'll have another level above us as well too. So we got 2 levels above us here. And then price just progressing here. Low. then higher low, and then this low is higher than that. Okay, and this is off heavy selling too, so I believe this low probably be true here. So, okay. Okay, yeah, price here definitely looking to get bullish, but just needed that small pullback. So yeah, after this, we should have a heavy burst. So yeah, just after on that 1 hour here too. 1, 2, 3. We got 4 candlesticks. The 4 hour, we got 2. Okay. And that 15 minute, we have a few. So it's really the 4 hour and the 1 hour. The count of those candlesticks a lot of the times are going to matter the most. Yeah, yeah. So that's the thing with it though. Like it'll go up to the trend line, so you could either use it as take profit or yeah. That's why I don't like trend lines too much on futures though. Just seeing the higher lows is better. But if you did wait for the trend line to break, then yeah, you could play for the take profit up here. But take profit does help you to see the little gap between this and the profit window that you have. Okay, 257 ticks. So this would be a, or you could play for the take profit up here too. Price might want to reverse here for a little bit, find a new higher low, and then break it, and then continue. Yep, yep, nice, exactly, exactly, exactly. Yep. And it's really just being methodical and really just taking our time. So okay. Okay. So yeah, I'm gonna have you just do